By the end of this video, you will know exactly how to open your first brokerage account, fund it, and place your very first investment, and you'll have a step-by-step plan you can start today, even if you've never bought a single stock in your life. Here's something that might shock you. Roughly 62% of Americans own stocks, either directly or through retirement accounts, but only about 30% have ever opened an individual brokerage account themselves. The rest? They're sitting on the sidelines watching inflation eat away at their savings, convinced that investing is too complicated, too risky, or requires thousands of dollars to start. That couldn't be further from the truth. In the next 15 minutes, I'm going to walk you through the exact process I use to help complete beginners go from zero to their first investment, often in less than 20 minutes. We're going to cover how to choose the right brokerage for your specific situation, what information you'll need before you start, and the exact buttons to click to get your account funded and ready. But before we get to the strategy, most financial advisors never tell their clients one that can shave thousands of dollars in fees off your investment journey. Let's start with why this matters so much right now. Quick, if you've ever felt overwhelmed by investing or thought you didn't have enough money to get started, hit the like button right now. It tells the algorithm this content is valuable and helps us reach more people who need to hear this. Let me paint a picture for you. Sarah is 32 years old. She's been meaning to start investing for about 7 years now. Every January, she writes it down as a goal. Every December, she realizes she never did it. The result? She's missed out on roughly $47,000 in potential gains if she had invested just $200 per month starting at 25. That's not some hypothetical number I made up. That's based on actual historical stock market returns of around 10% annually. 7 years of procrastination cost her nearly $50,000. And here's the painful truth. Sarah isn't special. She's average. She represents millions of people who let fear, confusion, or just plain inertia keep them from building wealth. Maybe you're watching this right now and feeling that same frustration. You know you should be investing. You've heard about compound interest. You understand, at least conceptually, that time in the market matters more than almost anything else. Yet every time you sit down to actually open that brokerage account, something stops you. The forms look complicated. The terminology is confusing. You worry about picking the wrong broker or making an expensive mistake. But here's what nobody tells you. Opening a brokerage account in 2024 is easier than ordering a pizza online. I'm not exaggerating. The major brokerages have spent billions of dollars making this process as smooth as possible because they want your business. Your job is simply to show up, follow the steps, and press the buttons. Let me show you exactly how to do that. The first step, and arguably the most important one, is choosing the right brokerage. Now, I want you to forget everything you've heard about needing to find the perfect broker. The truth is, for 90% of beginners, any major brokerage will serve you well. We're talking about Fidelity, Charles Schwab, Vanguard, or newer platforms like Robinhood or Webull. They all offer zero-commission stock and ETF trades now. That wasn't the case 10 years ago when you'd pay $7 to $10 per trade. Today, it costs you nothing to buy or sell most investments. So what should you actually look for? 3 things. First, account minimums. Some brokerages require you to deposit a minimum amount, often anywhere from $0 to $3,000 just to open an account. If you're starting with $50 or $100, you need a broker with no minimum. Fidelity and Schwab both let you start with literally $1. Second, look at fractional shares. This is huge for beginners. Fractional shares mean you can buy a piece of a stock even if you can't afford a full share. Amazon trades at around $180 per share right now. Without fractional shares, you'd need that full amount. With fractional shares, you can invest $20 and own about 11% of one share. Not every broker offers this feature, so check before you sign up. Third, consider the user interface. You're going to be looking at this app or website regularly. Does it make sense to you? Does it feel intuitive? Here's where most people get this wrong. They spend 3 weeks researching brokerages, comparing tiny differences in features they'll never use, and they never actually open the account. Don't be that person. Pick one of the major names I mentioned and move forward. You can always transfer your account later if you're unhappy, though you probably won't be. Now, let's talk about what you'll need before you start the application. This is where a little preparation saves you a lot of frustration. You'll need your Social Security number or, for those in the UK, your National Insurance number. The brokerage is required by law to collect this for tax reporting purposes. There's no way around it. You'll also need your date of birth, your current address, and employment information. Nothing complicated, just where you work and roughly what you earn. They're not verifying your income. They're using it to understand your financial picture. Stop. Before I continue, this next part is critical. Have your bank account information ready, your routing number and account number for your checking account. You'll use this to link your bank to your brokerage so you can transfer money back and forth. Most people don't have this information memorized, so grab your checkbook or log into your bank's app before you start the brokerage application. It'll save you from having to pause halfway through and hunt for these numbers. The application itself takes most people between 7 and 12 minutes to complete. You'll answer questions about your investment experience, your financial goals, and your risk tolerance. Here's what most people get this wrong about. They overthink these questions. The brokerage isn't using your answers to judge you or deny you an account. They're using them to provide appropriate recommendations and ensure you can access the investment products you need. Answer honestly, but don't stress. A beginner with conservative risk tolerance can still buy the same stocks and ETFs as an experienced aggressive investor. Once you've submitted your application, most brokerages will approve you instantly or within one business day. In some cases, they may ask for additional verification, like uploading a photo of your driver's license. This is standard identity verification, not a sign that something's wrong. Now comes the exciting part, funding your account. You have several options here. The fastest method is an ACH transfer from your linked bank account. This typically takes 1 to 3 business days for the funds to settle in your brokerage account, though many brokers will let you trade immediately with unsettled funds up to a certain limit. You can also wire money for same-day availability, though there's usually a fee between $15 and $25. For most beginners, ACH is the way to go. Here's a pro tip that changed everything for me when I was starting out. Set up automatic recurring deposits. Instead of trying to remember to transfer money every paycheck, tell your brokerage to pull $100, $200, or whatever you can afford from your bank account on a specific day each month. This is called dollar cost averaging, and it accomplishes 2 things. First, it removes emotion from the equation. You're not trying to time the market or waiting for the perfect entry point. You're investing consistently regardless of whether the market is up or down. Second, it makes investing automatic. You can't spend money that never hits your checking account. Most people who fail at investing don't fail because they picked bad stocks. They fail because they never consistently put money in. Automation fixes that. If you've made it this far, you're already ahead of 95% of people, and what I'm about to share in this next section is the most valuable part of this entire video. Don't skip it. Subscribe to Wealth Decode Plus if you haven't already. We drop a brand new money strategy every single day at 6 p.m. Hit that notification bell so you never miss one. Let's talk about placing your first trade. Your account is open. Your money is deposited. Now what? This is where many beginners freeze. The number of options feels overwhelming. Thousands of stocks, thousands of ETFs, mutual funds, bonds, options, crypto on some platforms. Let me simplify this dramatically. For your first investment, consider a broad market index fund or ETF, something like VTI, which is Vanguard's total stock market ETF, or SPY, which tracks the S&P 500. With one purchase, you own a tiny piece of over 500 of America's largest companies. You're instantly diversified. You're not betting on any single company's success or failure. The historical return of the S&P 500 is roughly 10% per year over long periods. Here's the exact process to buy. Log into your brokerage account and find the search bar. Type in the ticker symbol like VTI or SPY. Click on it, then look for a button that says Trade or Buy. You'll choose whether to buy a dollar amount or a number of shares. If you're starting with $100, select dollars and enter 100. Choose the order type, and for beginners, a market order is fine. This means you're buying at whatever the current price is. Finally, review your order and confirm. Congratulations! You now own part of the American economy. I need to pause here because this is where most people go wrong. They place that first trade and then immediately start second-guessing themselves. Did I buy the right thing? Should I have waited? What if the market drops tomorrow? Here's the reality. The market will drop tomorrow. Maybe not literally tomorrow, but it will drop. It always does eventually. And then it recovers, and then it drops again. And then it recovers again, usually to higher levels than before. The mistake 80% of people make is checking their account obsessively and panicking when they see red numbers. Your investment time horizon is decades, not days. A 10% drop in your first month means absolutely nothing if you're not planning to touch this money for 20 years. In fact, if you're still contributing monthly, a drop is actually good news. It means your next automatic deposit buys more shares at lower prices. Let's talk about account types because this trips up a lot of beginners. When you open a brokerage account, you'll typically choose between a few different types. A standard taxable brokerage account has no contribution limits, no restrictions on when you can withdraw, but you'll owe taxes on dividends each year and capital gains when you sell. A traditional IRA lets you contribute up to $7,000 per year, or $8,000 if you're over 50. Contributions may be tax-deductible, and you won't pay taxes until you withdraw in retirement, but there are penalties for withdrawing before age 59 and a half. A Roth IRA has the same contribution limits, but you contribute after-tax dollars. The magic? Your money grows completely tax-free, and qualified withdrawals in retirement are tax-free. For most people under 40, I lean toward the Roth IRA if you're eligible based on income limits. Tax-free growth over 30-plus years is an incredible advantage. But here's what nobody tells you. There's nothing stopping you from having multiple accounts. Many successful investors have both a Roth IRA, which they max out each year, and a regular taxable brokerage account for additional investing beyond those limits. Start with one. You can always add more later. What about those common fears that keep people from starting? Fear number 1, I'll lose all my money. While individual stocks can and do go to zero, a diversified index fund essentially can't. For the S&P 500 to go to zero, the 500 largest American companies would all have to simultaneously become worthless. At that point, we'd have bigger problems than our investment accounts. Fear number 2, I don't know enough to invest. You don't need to know much to buy and hold a diversified index fund. The strategy is deliberately simple. Buy regularly, hold for decades, don't panic, sell. Warren Buffett himself has said that most people would be better off just buying an S&P 500 index fund and leaving it alone. Fear number 3, now is a bad time to start. Statistically, the best time to invest was 20 years ago. The second best time is today. Trying to time the market perfectly is a fool's errand. Even professional fund managers fail to do it consistently. Your advantage as an individual investor is time, and every day you wait is a day you're not using that advantage. Now let me give you your action plan. Here's what you should do today. This should take you 10 minutes or less. Go to Fidelity, Schwab, or your preferred brokerage's website. Click Open an Account. Complete the application with the information we discussed: Social Security number, address, employment details, bank account info. Submit. You can do this during your lunch break. Here's what you should do this week. Once your account is approved, which usually happens within 24 hours, log in and link your bank account if you haven't already. Set up an automatic monthly transfer. Even $50 works. Then place your first trade. Pick a broad market ETF like VTI, VOO, or SPY and invest whatever you're comfortable with. Here's what you should do this month. Set up your system and forget about it. Your automatic deposits should be scheduled. Your investment selection should be made. Now your only job is to let time work its magic. Check your account quarterly at most. Monthly is too often. Daily is self-sabotage. The tools you need are all free. Your brokerage account itself costs nothing. The ETFs I mentioned have expense ratios under 0.1%, meaning you pay less than $1 per year for every $1,000 invested. Apps like Mint or your brokerage's own planning tools can help you track your overall financial picture. Now let me finally answer the question I raised at the beginning, the strategy most financial advisors never tell their clients that can shave thousands of dollars off your investment journey. It's this. The difference between a brokerage charging zero commissions and one charging even small fees compounds dramatically over time. 20 years ago, paying $10 per trade was standard. If you invested $200 monthly, that $10 fee ate 5% of your investment before it even hit the market. Over 30 years, assuming 10% annual returns, that fee drag could cost you over $40,000. Today, there's no excuse to pay trading fees on basic stock and ETF purchases. The industry has moved to zero commissions at all major brokerages, but fees still hide in other places. Fund expense ratios, account maintenance fees, inactivity fees. Read the fine print. A Vanguard index fund with a 0.03% expense ratio will cost you $300 over 30 years on $100,000 invested. An actively managed fund with a 1% expense ratio will cost you over $26,000 on that same amount. Same market returns, dramatically different outcomes. Choose low-cost, broadly diversified index funds at zero-commission brokerages, and you've just given yourself an advantage that most investors a generation ago couldn't access at any price. Let's recap the 3 key takeaways from today. First, opening a brokerage account takes less than 15 minutes and requires no minimum investment at major brokers. Second, your first investment should be simple. A broad market index fund that gives you instant diversification without requiring you to pick individual stocks. Third, automation is your secret weapon. Set up recurring deposits so investing becomes automatic, emotional decisions become impossible, and time becomes your ally instead of your enemy. Comment below. Which of these steps are you going to tackle first? Opening the account, funding it, or placing your first trade? I read every single comment and I'll personally reply to as many as I can. In tomorrow's video, I'm revealing the 5 biggest mistakes new investors make in their first year and how to avoid losing thousands of dollars learning lessons the hard way, something that took me years to figure out and most people never learn. Subscribe right now so you don't miss it.